Hello guys, hope everyone is fine. Okay, this is weekend and on weekend no forex. So we have to switch to crypto. So for crypto, let's select a coin for the analysis. Then that coin is Pepe, okay? It's not that famous, but still let's see that our strategy work on this type of volatile coin or not. Okay, first of all, daily time frame. As per the procedure, I will go quickly. Okay, this is break of structure. This is break of structure on daily time frame. For this break of structure, this low is responsible, so we call it D1 swing low for the uptrend. Okay, and after this, what happened? After this, we got a swing point here, which was again broken. So we have a break of structure here. Okay, so another break of structure on the daily time frame. Okay, and for this break of structure, this low was responsible, so this was swing low. But what happened here? It's change of character at this point on daily time frame. It has switched from uptrend to downtrend. After this, what happened? That we get uh, three candles in the opposite direction. This is first candle. After wick of this candle, this is second. After wick of this candle, this is third, and fourth and fifth. We have sufficient candles. Okay, so this structure is again broken, and we call it D1 break of structure towards downside. For this break of structure, this swing high was responsible. Okay, D1 swing high for the downtrend. Very good. So after this, do we get three candles in the opposite direction? One, after the wick, two. So we do not get three candles. So this means it's in continuation. Okay, we consider this complete line in continuation. Okay, there is no structure in between. You must keep this thing in mind, that we do not have to consider these structures within the trading range. Okay, this is internal structure, so we don't have to consider this. We have to consider this kind of structure after the break of structure, right? So there is no break of structure as such. After this, what we have? 1, 2, and partially 3 candles closing after each other. Okay, so this is swing low. This is swing low. Okay, so now you see we have analyzed and we have defined the trading range on the daily time frame. Okay, so we know that trading continues in N wave shape. Okay, if I make a structure here, you can see the N wave. So after this point, we are expecting this market to come somewhere here on the daily time frame and then break this low. Okay, for this we have to see towards the left. We have to see towards the left. Okay, let me analyze this for you. Okay, first of all, we have a fair value gap here. Okay, let me mark it. This is fair value gap. Okay, this is buy to sell candle giving a fair value gap. So this is very important candle. There are sell orders lying here. I change the color for the daily time frame. Okay, so this becomes important. This region becomes important. After this, rather before this, if we see and analyze the candles, we hardly find a fair value gap. Okay, you can see a fair value gap here. Okay, so this means this last candle is also important. So we have marked the areas. We have to consider premium and discount also. Okay, this is premium area where we have to sell, and this is discount area where we have to buy. We should prefer not to sell in this area. Okay, so even if we get some kind of structure here, that will be risky because there is a fair value gap here, and it is likely that market will dodge you out here and then take your stop loss or liquidity and then goes towards this way. So now the situation is that we are at the bottom and we are expecting a pullback on the daily time frame. It is strongly recommended that once it is downtrend, we should try to wait for market to reach here or here, and then we go for the sell positions. But if you have sufficient experience and confidence in your strategy and confidence in reading the market, okay, you can try for these buy positions. Let's go to 4 hours time frame and let's see what is happening there. 4 hours. 4 hours is telling us that market is in downtrend. Let's mark the structure. This is H4 break of structure down. And this is H4 swing high for the downtrend. Sorry, H4 swing high for the downtrend. Okay. And this is H4 swing low for the downtrend. Okay. All right. So you can see the market has touched this place, this region, and then reversed. Now we have a lot of liquidity here. Liquidity here. So I suspect that market should be in the uptrend, on lower time frame. Okay. This uptrend is likely to sweep this liquidity, okay, and then it is likely to go to this region. This is I'm expecting based on my technical analysis. Okay, so we know 4 hours time frame, and let's mark the liquidity. This is liquidity. This is liquidity. Okay. So we are expecting that market will go up. Rather, it is going up. Let's see which candle is more attractive based on fair value gap. I think this is the candle. Okay, this is the region on 4 hour time frame. From where this market can reverse. Okay. What is RSI saying? RSI is not giving anything here. Okay. there was some divergence here. Okay, there was some divergence here, but this divergence could bring the market up till this point only. Okay, so there is a lot of liquidity towards this side as well, but since the market is in downtrend, okay, so it is likely that market will try to sweep the liquidity towards the sell side and then go down. Okay, this is how I analyze this. This is very strong area. This is again very strong area where the market can come on the 4 hours time frame. Because we have a huge fair value gap after this. Okay, so this is yet another area where the market can come. If I draw fib retracement, so you can see it is exactly at 0.786, and this is exactly at 0.618. So these are the two regions. Once the market reach here, we should go to the lower time frame and we should try, because once the market goes up from here on the lower time frame, right, once it goes up, let's say in 1 minute time frame, it reaches here making higher high, and after that it makes lower low and then lower high, then this is the point where we should enter the market for sell position. So this is what it is. I recommend 15-minute time frame because 15-minute time frame there are less possibilities of deception. I believe if you get this structure in 15-minute time frame, this trade is more likely to be successful. The same thing can be expected here. Okay, so these are the areas we should wait and then enter the market for the sell position. Okay, let's go further in the 15-minute time frame. Let's see what is happening there. Oh, okay, we are not getting three candles closing after each other in this region. But we are getting here we are getting three candles, okay, which are closing after each other. So this is M15 break of structure towards upside, M15 break of structure up. Here what has happened? This is M15 change of character towards downside. Okay, so this is your high, this is your high, we call it M15 swing high for the downtrend. Sorry, swing high, M15 swing high for the downtrend. Okay, so on its way down, do we have three candles in the opposite direction? No, no. Here we have. Okay, so this is swing low. This is swing low. This is M15 swing low for the downtrend. Okay, so this is the trading range for 15-minute time frame. Okay, so we are in downtrend. Here if we see this area, after this area we have a fair value gap. At this point market is in that fair value gap and you can see it's going sideways. I think this is the point from where the market can retrace. And this is another point. So these are two strong regions from where the market can retrace. Once the market is pulling back on 15-minute time frame, you can find an uptrend on 1-minute time frame. There we go. It's very noisy, but still. You see, once the market has touched this low, and retest it, after that we have a good candle combination here showing us that the market is going up. Okay, let's not get into this detail. Let's try and see the uptrend. Okay, here the market has gone to the downtrend. M1 break of structure towards downside. Okay, What has happened here? Yes, it is break of structure. And this is change of character. Okay. M1 change of character towards upside. This is high. This swing high is again broken here. Market has again gone to the downtrend. This is M1 change of character towards downside. This is swing high. Now here the market has again changed character in 1 minute time frame. Okay, so this is swing low. This is swing low. M1 swing low for the uptrend. Okay, we get 3 candles here. So this is confirmation. This is M1 break of structure for the uptrend. Okay, so from here, with the help of RSI divergence and candlestick pattern, you can take buy position if you want. Okay, you can take buy position somewhere here, somewhere here, with this much stop loss. And what should be your what should be your take profit? You go to 15 minute. Once you take position here, your take profit should be somewhere here or somewhere here where you are expecting that market is likely to go. Okay, even if you keep it here, it's giving you an excellent risk to reward ratio. Okay, it's giving 1:11.5. So this is how you can take buy position, and now you can clearly see that market is in uptrend on 1 minute time frame. You have to be very cautious while taking on the positions, like long position which is against the trend. You have to be very careful. Once you have taken the position and market has gone your way, then you should break even, okay, so that even if the market comes back, then you don't have any loss. Okay, at this stage we can see some sort of divergence. Although the market is adhering to fib retracement, you can see market has retraced from 0.786, gone up, but if you read the candlesticks here, you will see you can foresee that market is going to do this, and maybe after this it goes up. So this is how we can read market structure in crypto. This strategy is equally good in crypto. What I suggest is that you do a lot of back testing from this replay, okay. Instead of marking like this as I have done, don't do this. I suggest you go in the replay mode, cut the market, remove all the drawings, and then run the market like this, and then take the positions. Excuse me. Then take the positions, okay. Carry out lots of back testing. After that, you must carry out forward testing, okay. How to do forward testing? Use paper trading, use demo account, and make live trades. Then analyze your mistakes. When you validate with the forward testing, then you are all set. Go for prop funding challenge, get the prop funding account, and then sail through. Okay guys, wish you very best of luck. Do take good care of yourself. I'll see you in the next video. Bye for now.